Hi, I'm Evaldo Albuquerque, and today I want to show you one of the charts that I'm watching right now, and that's the S&P 500 index. Last week I told you about these inverse head and shoulders in the 4-hour chart of the S&P 500 index. In that occasion I told you that if the S&P 500 closed above that neckline, the S&P 500 would most likely move towards 1380, which was the minimum price target projected by these inverse head and shoulders. For those of you who don't know what's in inverse head and shoulders, it's just a reversal technical formation that indicates a downtrend is turning into an uptrend. So you have the left shoulder, the head, and the right shoulder. So once the price closes above the neckline, it indicates the beginning of a new uptrend. So you'd expect the price to move higher. So in last week I told you that if the S&P 500 closed above that neckline, the S&P 500 would move at least to 1380, and now you can see that did not happen. The S&P 500 moved higher, but it couldn't break above 1360. Sometimes when in these occasions of inverse head and shoulders, the price will come back to touch the neckline and then continue the rally. But in this occasion, the S&P 500 broke below the neckline, which basically invalidates these inverse head and shoulders. So I'm no longer bullish on stocks in the short term. So let's take a look at the 1-hour chart and I'll show you why. In the 1-hour chart of the S&P 500, it looks like it's forming another head and shoulders. This time is a bearish head and shoulders. So here we have, let me delete this line. So here we have left shoulder, the head, and it looks like the S&P 500 is forming a right shoulder right now in the 1-hour chart. So today when you watch this video, make sure you keep an eye on the S&P 500 index and see if this turns out to be a head and shoulders. This will be complete if the price closes below 1310. Now there is a lot of demand around that level, so that's the key technical level to watch in the S&P 500 index. If it closes below 1310, I would expect to move at least 50 points lower. So that would bring the S&P down to around the previous low point, around 1265. So make sure you keep an eye on this level. If the S&P closes below the neckline, around 1310, it will likely move much lower. And in the forex market, that means that the dollar will rally across the board. The dollar has been rallying whenever stocks are moving lower. So if the S&P moves lower, I expect the dollar to rally across the board. That's all I have for you today, and thanks for watching.